Welcome back to Teshkid FX for another Quant price prediction update, which at the time of this recording is holding above the 20-day MA here on the 4-hour chart, which is now acting as support for us to continue gearing up. We are also trying to battle out with a key area of resistance at around the $124.9 mark. We have also continued to obey the Elliot structures, and in this video I'll be giving you the long-term outlook here on the Quant chart and also give you the short-term outlook here on the Quant chart. And before I do so, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to first give you the fundamental analysis, where you can see that here on the Forex factory today we have the CPI data which is coming out, and we also have the FOMC meeting, and these two events will result to a lot of volatility in the market, and that volatility could be good for us to help us continue gearing up, see a break above that key area of resistance, and also continue gearing up, obeying the Elliott structures. And getting now to the technical analysis, basing it on the Elliott structures, allow me to first give you the long-term outlook here on the Quant chart, where you can see that after seeing our bear market low at around the $40.1 mark, we started this massive bounce to the upside, obeying the Elliott structures, where you can see I have this Elliott structure in blue, having the wave 5 giving us a peak at around the $229 mark, and also completing the formation of a higher Elliott wave count 1 to the upside, before we started a corrective structure in the formation of this wave 2 in a move that managed to get into the minimum retracement area, highlighted here on the charts using this red target area. And having seen the low for this second wave, whatever we expected next here on the Quant chart was the start of an impulsive wave in the formation of this wave 3. And by first giving you my minimum target areas in the formation of this wave 3, by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, that now gives me a target area in the formation of that wave 3 at the fib level 1.618, and that is at around the $396.4 mark, and that is the minimum that I'm expecting Quant to do on the long-term scenarios in the formation of that wave 3. And because a third wave is an impulsive wave, we also expect to see fractal waves in formation within the formation of that wave 3. And here on the charts you can see that after seeing our low in the formation of this wave 2 within this red target area, we started seeing higher prices, where we first saw that 1-2 setup to the upside before we started our Elliott structure of this Elliott structure right here in blue, where we have now peaked in that first wave, seen a corrective structure in the formation of this wave 2, and now my primary scenario is that whatever we are seeing is the formation of this wave 3. And in the formation of that wave 3, which is also an impulsive wave, I'm also expecting to see another micro 5 wave structure to the upside, having the wave 5 fully maximizing our target areas and also giving us the high for these higher Elliott wave count 3 to the upper side. And it is this micro Elliott wave count that is going to give me the short-term scenarios. So zooming in so that we can see that better, you can see that after making our low at around the $106.4 mark, we started this bounce to the upside in a move that has now been obeying the Elliott wave structures, where we can now term these as the first wave. We have also seen a corrective structure in the formation of this wave 2, and I now believe that whatever we are seeing at the moment is the start of an impulsive wave in the formation of that wave 3 before we can expect a wave 4. Then continue gearing up in the formation of that wave 5 to the upside. And by first showing you that this second wave right here has done the minimum that we expect a wave 2 to the lower side to do using the Fibonacci's, by connecting them from the low of the first wave to the high of that wave 1, that gave me a minimum retracement area between the fib level 0.5 and the fib level 0.78, which is a target area that lies between the $120.1 mark and the $112.1 mark, and it is within this blue target area that I was expecting to see the low for that second wave, and there are high chances that we have now bottomed out in the formation of this wave 2, and we are now ready for that massive pump to the upside in the formation of that wave 3. and giving you my target areas in the formation of this wave 3, which is my short-term scenario, by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the Fibs to the low of the second wave. That now gives me a target area in the formation of that wave 3 at the Fib level 1.618, and that at around the $160.9 mark, and that is the minimum that we can expect Quant to do here on the short-term scenarios. And for that move to also play out, we need to continue holding above the 20-day MA, both on the 1-hour chart and also on the 4-hour chart, and also see a break above our key area of resistance at around the $124.9 mark. And the moment we manage to break above that, then we can continue gearing up to our next key area of resistance at around the $133.2 mark. And the moment we manage to break above that, then we can continue gearing up. And also the CPI data and also the FOMC meeting, once they have a positive impact on the market, that will trigger a lot of volatility in the market to help us continue pushing higher and fully maximize our target areas. And also taking a look at the indicators here on the RSI, we are trading at around the 50 mark, meaning we have massive room for us to fully support higher prices. Also taking a look at the MACD, we have been able to print a bearish cross, so let's be patient and see how that plays out, and I'll be keeping you updated.